Ladies and gentlemen, welcome back to another episode of my new YouTube channel. As always, I'm your host, David Shahet, and today I have a very exciting video. I've been doing a lot of research about this particular stock, and I want to just take some time to talk about it. Before we get started, the following is not financial advice. Investments are risky, and you can lose all of your money investing in stocks. Always do your own research. This is not advice nor a recommendation to buy or sell any asset. Just remember that going into this, guys. Now, with that disclaimer out of the way, today I want to talk about Duolingo stock. Duolingo has been making there's been a lot of noise about it online. There's been a lot of noise about Duolingo online, mainly because of the extent to which it has fallen from its all-time highs of $550 a share, now down to around $140 a share. And the way I want to structure this video is kind of like I did the last video, right? I don't want to do any presentation. I don't want to do any, you know, hectic stuff. This is a video where we're just going to go through what I think the Bulls are arguing, what I think the Bears are arguing, and then who I'm seeing that has the edge over the long term. This is going to be just talking out loud, thinking it through, a great thing just to listen to on the side. So let's go ahead and get started, okay? Um, I think that this could be a major opportunity, okay? We are seeing right now a lot of software businesses being sold off very heavily, okay? The entire sector, and a lot of the names that people are interested are the B2B companies, so Atlassian, ServiceNow, Monday.com, DocuSign. But what's interesting about Duolingo is it's a B2C mainly, right? In the sense that the subscription, the software it sells as a service is towards the consumer, not a business. It's also getting sold off. And it's getting sold off under this AI narrative, basically saying that as AI is advancing, it's getting very good at software engineering. And if it's easier to make software, then software companies are at a risk of being really replicatable, really replicable businesses. Okay. And I think maybe there's some truth to that, but also, historically speaking, in the markets, whenever you have a big sector sell off, it is worth usually just going and digging through and seeing what is in this sell off that's actually looking interesting. Okay, so let's get into this. I've written a bull case, a bear case. I've addressed all the bear cases, what I think are all the bear cases, and then some final thoughts. Okay, so let's just first go through the bull case for Duolingo, why it might make sense to have this in your portfolio. Duolingo is a young, fast-growing company in the education industry. What began with a mission to make education free for everyone, good education universally accessible, turned into a profitable cash-producing freemium business that is now trading at the lowest valuation in a long time. Okay? So that's kind of the introduction, right? Duolingo was started as a research project at Carnegie Mellon University with CEO Louis van Aan, who was a professor, and one of his PhD students, Severin Hacker. And they wanted to have a computer be able to teach you something. And they decided to start with the languages because language is one of those things where, especially if you live overseas, learning English can increase your earning potential by a lot. Okay? And they wanted to make the ability to learn universally acceptable. They didn't want to shut off the content with paywalls and things like that. So I made the claim that it's a fast growing business. So let's look at metrics to prove that. Daily active users, 50.5 million people every day using Duolingo, which is up 36%. Monthly active users, 135.3 million, up 20%. Paid subscribers, 11.5 million, up 34%. Paid Sub penetration, 9%, up 50 basis points. Revenue of $271.7 million, up 41% year over year. Bookings of $281.9 million, up 33% year over year. And bookings basically is a metric that they give because with GAAP principles, if I were to pay for a 1 year subscription for Duolingo in January, the GAAP principle says you need to spread out that $12, that monthly payment over the whole thing. Even though I paid them up front, you have to spread it out over the course of the subscription time. And bookings is kind of a metric that lets you gauge what are people kind of, I guess, reserving in their subscriptions looking ahead. And lastly, EBITDA of $80 million with a 29.5% margin. Okay, and this is happening in their latest quarter. The stock has fallen 70% in this time frame. Okay, the bull case for why Duolingo makes sense at these levels is relatively simple. Okay, as time goes on, Duolingo will continue to attract more users to their platform. This is because Duolingo has a very large moat on user behavior, which helps them to make the most addicting platform possible. So let's pause for a second. The moat of user behavior. Okay. What I mean by that is when people say that AI will be able to replicate businesses quicker, I think they're really underestimating certain businesses. I'm not going to speak for all SaaS companies, but in terms of Duolingo, 16,000 A/B tests have been made so far on this company. 16,000 tests within the company gauging user engagement and behavior to make it as addicting as possible to be learning on the website. And this improves retention and this improves their conversion rate. So that's just, we're going to get even more into kind of these types of misconceptions about the bear cases for Duolingo, but that's a big thing. Um, and just continuing, Duolingo has three main ways that they can improve their business: monetization, user growth, and improving the product. Management has made it clear to investors that their goal currently is to focus on the latter two options, so user growth and improving the product. Their thought process is that as AI continues to improve, we are heading into an age where one on one first class tutoring will be easier to develop and accessible to everybody. They believe that to fully capitalize on this, they must make their free app version as good as possible. The reason why this will be beneficial to investors is because by focusing on user growth and having a great product, over time, we may see them grow monthly actives closer and closer to hundreds of millions of people, 500 million, maybe even a billion people one day if we look really far out, decades out. Okay? And then with a larger user base and a better product, they will be able to then pull monetization levers and see that revenue become to come in. And we already know that with their free cash flow margins, this is going to be a very profitable business. It's already profitable, but those margins will expand over time. And it's also important to note that because this is one of the things that's having more of the short term investor selling the stock off, is that management is directly telling you that they're going to be focusing less on monetization and more on user growth and making the product better. And the reason why investors in the short term don't like that is because if you want to make money every single year, every single quarter, then you kind of need all of your holdings to be really focused on making the money go up. But this is like where another fallacy comes in. It's not like this would be a very different if, for example, their revenue growth was single digits and they were saying this. Because that would mean that there's a turnaround that needs to happen to the business, and this is a turnaround play. No, their revenue is growing 41% year over year. So it's not like um, they're growing single digits and this is their turnaround play. They're growing extremely fast in their revenue, but they're just kind of pivoting to get that maximum gain in the long term. And that's where some of this asymmetry starts to form, and we'll talk more about this as we go on. So that's the bull case. Now let's talk about the bear case. The bear case says that Duolingo is just like the rest of the software industry in the age of AI, which is a dying company. The company has several key bearish themes going against it that makes it a bad opportunity, right? So number one, we have the technology. As technology advances, live translation technologies will make language learning more of a commodity and more obsolete. And when I say live translation, I mean, the Meta glasses or the Apple AirPods with their live translation, or just like translation products in general. Okay. That's number one. Number two, we already talked about this. As AI advances and gets good at coding, software products become more and more replicable. Okay, so you kind of lose this edge of being a really good product because we can just code a duplicate overnight or, in a short period of time. Though Duolingo is a fast growing company, all of their key KPIs like daily actives, monthly actives, and paid subscribers, the growth rate is decelerating. So, for example, they were growing monthly actives a couple quarters ago at 40%, 30%, and now it's around 20%, right? It's kind of this thing that over time since they went public, it used to be growing 50%, and now it's kind of decelerating to 20%. That's not a good thing. It's deceleration in the growth rate. Still growing, but deceleration. The recent CFO departure signals issues occurring inside company leadership. A company that does not prioritize monetization is unworthy of capital allocation, right? You could take that stance. You could say, I don't even want to be in any company if they're putting a pause on how to make the most money, right? Their conversion rate of 9% is unimpressive. Okay, you usually want to see conversions rates 15, 20%. They're only at 9%. The company is fairly valued, not undervalued, because you still have a 34 price earnings metric in the next 12 months. It's still a premium. And also, just because the company fell doesn't mean that it's a good buy now. It could have just been really too overpriced before, which honestly it was when you look back, like 250 PE. And so just because it fell doesn't make it a better buy. And as an overall business, Duolingo is competing for attention on the same device with the most addicting apps in the world, primarily Facebook, Instagram, TikTok, YouTube, etc. Overall management is trying to improve the application long term, but their decisions were contrary to shareholders in the process because they're putting a pause on the monetization. Lastly, we know that a lot of their engagement comes from unhinged content on social media, so that's kind of hard to keep going, and you can't guarantee that the user growth will come from that. And their fastest growing market, which is China, has a lot of geopolitical risks that could affect the business. Okay, so there you go. We had the bull case, and now we had the bear case. And I think I'm being really, like I think I'm, being unbiased. I think that's a really strong bear case. Like I didn't hold back, and the bull case as well. So, why am I overall looking at this as a potential opportunity? Um, and this could be like a shocking opportunity. I could be wrong, but we're gonna get into that. Um, so first, let's talk about the biggest bear case, which is the AI risk. Okay, is AI more likely to destroy the need for language learning because of live translation, or make Duolingo's product dramatically better? Okay, which is more probable over the 5 year term? I just want to say one thing. When you're listening to some of the interviews, which with Louis Van On, the CEO, he was asked about live translation, AirPods, Meta glasses, and he made a really good point. He made the point that translation tools have been around for a very long time. Okay, and he talks about how, and this is true. You can actually fact check this. Every year, tech companies like Google and Meta come out and they do a demo of live translation. You can go back a decade and there's a demo of some type of translation tool, and it's been happening every single year. And even though it's been getting a lot better since 10 years ago, Duolingo has still been growing. Okay. So that's just one thing about the specific live translation thing, that this isn't a new thing. Like today, like I saw a tweet where somebody said that like ChatGPT just launched chatgpt.com/translate, which just looks like Google Translate, and they're like, oh, Duolingo is dead. It's like, well, first of all, this is just Google Translate. This is nothing new from OpenAI. And second of all, Google Translate's been around much longer than Duolingo. That hasn't hindered Duolingo's success in that time period, because think about this: since 1997, computers have been better at playing chess than humans. But chess remains a very popular sport, and it actually is like one of the most popular sports today, even more popular than it was in 1997 with streaming. So like machines being better at something than humans doesn't mean that humans stop doing it. We see that example in chess, and we also see that example with Duolingo language learning. Okay, because you want to have immersion with somebody speaking to them. You don't want like a you want to like actually have a conversation. So that's a slight detour to a very specific AI risk. Let's talk about the more broad AI risk. Okay, my response. It is my opinion that Duolingo is much more likely to be a beneficiary of AI. A beneficiary of AI, rather than a business that gets disrupted by it. In listening to CEO and CTO interviews, which by the way, management, you still have the founders, okay? We have learned that Duolingo was actually one of the first enterprises that began using ChatGPT for their product. They were literally on the, like, I guess you would call it the wait list to be one of the first companies to get access to ChatGPT for their app. Additionally, new amazing products like Video Call on Macs, I gotta tell you, as somebody who speaks four languages, learning a fifth, with the languages where I'm really high up, like B2 level, which is right under like native speaker, the Video Call is amazing. And what that is an LLM behind the scene. People are it's just people aren't doing the due diligence. They're saying that Duolingo isn't using AI to make their product better. Duolingo's been using AI to make their product better for the past 3 years. For the past 3 years, the video product in Max is an LLM. You talk to an LLM. Since ChatGPT launched, Duolingo revenue has grown 10 times, and their product velocity has gotten quicker as well. For example, the latest course they came out with, chess, was shipped in 9 months. Okay? When you listen to the interview with the CTO and CEO, they talk about that would have probably taken 1 to 2 years. They shipped chess in 9 months. Okay? And it's really crazy because people are saying AI will kill Duolingo, but AI has actually made Duolingo's mission, which is very ambitious, universal access to great education. AI makes that possible because AI presents the opportunity for them to actually achieve their mission to provide one on one personal, cheap tutors. That has never been widely accessible. Okay? But AI actually gives, you have a shot now to give everybody a personal tutor that understands the person, that understands you, and can teach you a lot. Lastly, as a computer scientist myself, I really doubt this narrative that Duolingo loses its moat because AI is a good programmer and that you can just vibe code Duolingo with Claude. Okay? It is a very sophisticated app. Number one, it is native built, which means that they're not using Flutter, um, which is like a Google framework to be able to code just one code base and it works on Android and iOS. No, it is native built, two separate apps, two separate code bases for Android and Apple, which lets them to have all the haptics, the animations, just the feel of it is really good. It also has had about 16,000 A/B tests that made it what it is today. Okay, about user behavior, what gets people to engage. Okay, aside from that, so that's saying, I don't think people are just going to vibe code this overnight. Okay, I also don't think that people are just going to go to ChatGPT and learn a language because as somebody who's learned three foreign languages, it takes time to learn a language. It takes years to get to a very good level in reading, writing, speaking, and listening. Okay? I'm highly doubtful that people are going to log on to ChatGPT, which starts from scratch every single time, and keep learning that language. I really don't see that being something that happens. And the only other thing that would disrupt them in this specific bear case is that a big player like OpenAI or Anthropic tries to build their own product for language learning. But that's also unlikely because if you're an OpenAI and an Anthropic, let's take OpenAI for example. You have around $20 to $25 billion of revenue. You're not profitable. You have about $1.4 trillion of spend you're supposed to give to your partners in cloud, chips, etc. Okay? The leader in the language learning space is Duolingo, which has a revenue of roughly 1 billion. Are you really going to go for language learning apps to try to, deliver for your shareholders? Those shareholders want you to challenge the status quo of the search and advertising sectors. In other words, they want you to be going after the big boys like Google search and Meta advertising and Amazon ads. That's what they want you to be doing. They don't want you to be going on a side quest to try to beat Duolingo and get that $1 billion in annual recurring revenue. Okay, so Duolingo is kind of like we've seen this movie so many times. The way that Spotify was able to be the winner in streaming music, even though you have Apple Music and Amazon Prime Music, because Spotify's focused on one thing. Netflix focused on just streaming movies and films and shows, even though they have Apple TV and Prime Video and everybody's a competitor. Duolingo focused on education. Okay, they have the edge here. And the big tech companies, especially the big AI companies, they're just unlikely to go after these small fruits. They need to go for the major harpoon. Like they gotta go for Moby Dick. They gotta get that search business going or whatever they want to do. So that's the first thing addressed. On deceleration, okay, the bear case says that KPIs are decelerating. The bull case ignores this. Is 36% daily active growth decelerating to 20, story breaking, or is it just a maturing company? So first of all, it's not decelerating to 20%. It's more like 30% or so. But in terms of deceleration, it's an important thing. But ultimately, deceleration of KPIs is a very common Wall Street phenomenon that leads to really healthy businesses being sold off. Because Wall Street is in the game of pricing the future and having expectations. Okay? But usually they're bad at expecting things. The most common word next to earnings is surprise, right? So usually they get it wrong. And because this is how they operate, if a business that was doing 50% goes to doing 40%, you have to sell the stock off 70%. It's just the way that it works. Okay. Um, while deceleration might be able to justify a short-term price decline, okay, which is part of the reason why I'm kind of trying to maybe buy this in tranches and not just all at once. Over the long term, it doesn't really make sense. Okay, as businesses mature, their growth rates decrease. They don't stop growing, but the growth rates decrease. It's just like one of the laws of nature, one of the laws of economics. It's the reason why AWS is still not growing at 40%. It's growing at 22%. Okay, because it became a bigger business, right? And I say this here, it kind of sounds sarcastic, but it's really how I'm looking at this. I would love to own a decelerating company that's growing their revenue still 30% and their free cash flow 50%. I'd love to own a decelerating company like that. Okay. A lot of the metrics are still very impressive with growth, and this doesn't break the story. Okay. I would say that the story might only be broken if this gets into single digit growth. Okay. For example, maybe it gets to like 7, 8% revenue growth, 7, 8% daily active user growth. Yes, then the story is dead in terms of it being a growth company. How far are we away from that? We are very far from that. Okay, so from that standpoint, deceleration, it's something that Wall Street worries about, but eventually, we're in a basic crash cycle for this stock, and I think it's presenting a time to go into it because over time, that growth will get better. Shifting to monetization, okay, the bears say that not prioritizing monetization is unworthy of capital, right? If any company is not prioritizing monetization or profitability or whatever, how can you invest in it? They're uninvestable, right? Um, okay, Duolingo. Duolingo has very good management that understands taking the long-term view. Okay, very similar to Bezos at Amazon. Okay, the fact that one co-founder is the CEO and the other co-founder is the CTO is very comforting because you know that the people who started this company are still here and they're leading it. Okay, and they're really focused on leading it. Netflix and Amazon both understood this idea because what Netflix understood was that by prioritizing long-term user growth, once you grow that user base, that's when you start to gain tremendous pricing power for your business. Netflix has 325 million subscribers, okay? And they have pricing power because they have the best product. Okay, listen to the words I'm saying. It's exactly what Louis Van Aan is trying to get across. Because Netflix has a massive user growth and Netflix has the best streaming product, they have the pricing power, which is the monetization lever, meaning that Netflix is so easy to cancel, but I bet if they increase subscriptions by $1 a month, nobody's canceling. That's called pricing power. Okay. Amazon also accomplished this by being unprofitable in their e commerce business for several years and still slightly profitable today. Why? Because they understood, specifically Bezos, he understood that by being consumer driven at all costs to gain the consumer count, then they can be monetized in other segments like Prime subscriptions, which is a higher margin segment. So Louis Van Aan's coming from the same angle. He's saying that if we prioritize user growth and having the best product, the equivalent to Amazon's free shipping, the equivalent to Amazon taking anything back that you want to return, if we get that user base on Duolingo by having it be the best, most addicting platform to learn a language, to learn chess, whatever, then we're going to be in a very good position to turn on monetization levers. Okay. And again, they're saying this when they're still growing 30% revenue, even more than that. Okay. And there's a quote from Duolingo's leadership, the CEO, saying this, which proves this. He talked about how we won't increase ads on our non paid users just to beat the quarter if it reduces our daily active users. Again, they're doing all these tests behind the scenes. So they can see that if we were to show one more ad, then okay, great, we make more money this quarter. But if we show more ads, people might get annoyed and they might leave and we have less daily actives. And is that worth it? Long term, it's not worth it. Long term, the best businesses grow the biggest user base, make a really good product, and then get people to continue paying for it over time. Okay? This is disciplined. Wall Street hates that right now, but I don't think they're going to hate that long term. Now, on valuation, this is trading at a 7 or so price sales and a 34 price earnings on the next 12 months. So what like is this cheap? Is this expensive? One of the biggest reasons why I'm so interested in this company for the long term, I'm talking about 5 years, this could be a big outperformer, is because it's currently a $6.5 billion market cap with $1.12 billion of cash and zero debt. Okay? It is just like Celsius, basically, in September of last year, of 2024. Celsius also had $1 billion of cash, zero debt, and was trading at $5 billion or something. And it was suffering because of growth deceleration. It was actually worse than Duolingo. The growth was actually going down on revenue because of an inventory issue with Pepsi. So it's literally very similar. Okay? So when you have 20% of your market cap nearly that is cash, the risk goes down of the bet you place because you're really paying for $25 a share in cash and then $115 a share for the business. For a business that's making $1 billion a year, $300 million of free cash flow, right? I think if you look at price to sales or enterprise value to sales and enterprise value to free cash flow, this is a cheap stock. Okay, it's looking pretty cheap. Enterprise value to sales is under 6. Okay, which for a company growing 40% revenue, under 6, even if it decelerated to 30%, under 6 EV to sales is quite low. And also for a company with a 36% free cash flow margin, they're trading at 16 roughly EV free cash flow. Okay. So, that's pretty good. And that EV free cash flow shows us that there's going to be future profitability. Keep in mind, it's already profitable, but that's going to be even more profitable in the future. You're probably going to be able to get a really, really healthy operating margin over time. Number five, CFO departure. Some people are saying that that's bearish. It's very difficult to imagine that a CFO leaving would be a major reason to sell the stock. Number one, it's just like people leave jobs. CFO is a job, and he left. He was there for a long time. You know what I'm saying? And he's leaving at fundamentally like they've never been making more money. They've never been more profitable. So it's nothing like that. Um, Also, they gave us preliminary Q4 insights, which showed their bookings towards the higher end of their guidance. So probably like around $330 million for bookings. And the daily active users are still growing 30% year over year. Okay. Now, China exposure. Um, you know, this is kind of a smaller part of this. Some people are bearish about this. Um, they're saying, okay, China is the fastest growing market, but it has a geopolitical risk. That's true. Um, I think Duolingo will be fine with or without China. I don't think that's not a big part of their communication with shareholders. Like, it's not like, for example, Starbucks, who goes on and says that we're super excited about our venture for the China business. They're not, taking much time to talk about it. I think Latin America, Europe, Africa, India, and North America are plenty for them. They have a lot of growth in Asia. That's true. Um, The CEO has stated that given the geopolitical risks, they're not investing too heavily into China to make their exposure somewhat asymmetric in case, for whatever, they get put on some, bad situation where they can't sell into China. They haven't invested too much in there, so they're not going to lose. They're not going to lose money from that. At least they're not going to lose a lot of money. So I'm not really too worried about that. I think that's a much smaller part of the bear case. So that was a lot of talking, but the final thoughts. The final thoughts. It feels like an asymmetric bet. It feels like an asymmetric bet because $1.12 billion of cash, zero debt, free cash flow margin 36%, daily active users growing a lot. Okay, 36% last quarter, 30% this quarter. I think the deceleration will be fine. I think the fact that they're focusing on user growth will make that re-accelerate. Okay. And I think they're in a position to re-accelerate for the daily active users. And for the monthly active users, I think that will re-accelerate. And since they're growing revenue quite quickly, and since their bookings are doing quite well, at the end of the day, this may be a winner long term. So I hope you enjoyed this video. Let me know if you have any questions. We can talk about this in the comments. That's it. Bye-bye.